Hey everyone, thanks for tuning into the Canadian Private Lenders Podcast, a show covering the private lending industry, the mortgage broker space, and the Canadian economy. Your hosts are Neal Andreino and Ryan MacNeil.
All right, everybody, welcome back. It's episode 93 of the Canadian Private Lenders Podcast with your hosts, Ryan and Neal. Neal, we are back outside of studio for the first time in a long time. How about that?
It's exciting. We got fancy new microphones, cameras. We're all set up.
Yes, sir. Neal, you're freezing a little bit there, but hopefully we'll be good here. But luckily, if we do lose you, we got a special guest to carry the load here. We're welcoming in our friend Sanjay Ramwani. He's the Chief Operating Officer at Indigo Blue group of companies, which includes Indigo MIC as well, which we'll dive into today. Indigo Blue is an Ontario-based, primarily focused on residential mortgage opportunities that fill the gap created by tighter guidelines at traditional banks and trust companies. Additionally, Indigo Blue actually expanded their operations to Atlantic Canada a few years back, so we'll get into that as well. But Sanjay, welcome to the show, and thanks for joining.
Thanks very much. We're excited to be here.
Awesome. So we've got to know you a bit over the last couple of years, which has been kind of cool. Obviously, with your expansion out to Atlantic Canada, but don't know as much about your history. So can you kind of walk us back about maybe a bit about your personal career experience through the years, kind of how you got into this space, and a bit about the evolution of Indigo Blue as well.
Oh, wow. I wish it was something more exciting and that I could tell you. But it really is one of those things where, in schooling, it started off really some sort of interest in economics and business. And like anybody at that age, don't really know where you're going to go. I think you know what you don't want to do. And you do whatever you try and do the opposite of your parents tell you. So forced myself into the banking industry and attempted different types of roles there, from personal banking to financial advisory work. Did some commercial banking, so got a lot of the training, a lot of the experiences under my belt that way, and then really got my first opportunity outside of the banks towards just before the meltdown in late 2000s, where I was then solely into the alternative lender market. So had worked with a few alternative credit lenders, and then did that for about 7-8 years. And found myself in a spot where it's like, what more is there that I can do in the alternative marketplace here for these corporate lenders? And at the time, my current business partner, who was my boss at that time, sort of thought about this for the last couple of years into that stint and said, okay, I think it's probably a good opportunity for us to try something on our own. The market was right for the private side, the alternative side, with all the regulations coming down. And it seemed like a great opportunity. I mean, it's always difficult, as you guys would know, when you jump into the world of entrepreneurship. There's always something to hold you back. But for us, it was one of those things, at some point you got to go. So but I had made that change, had a little kid, had another one on the way. And it was sort of an awkward time to do it, but there's never the right time.
No.
So we, that was in 2014, launched Indigo Blue at that point. So it's been
amazing.
That's
super cool. So I'm just curious, it was Equitable Bank you guys were with before starting, correct? So primarily an alternative lender, would typically be referred to as a B lender, I guess, to most people in the space. So how did that kind of experience help or hinder you in moving to the pure private side?
I think it extremely helped a lot. We learned an incredible amount about, in the banking side, you really don't know about the world outside the bank. Getting to Equitable and really being a part of its growth, its true growth, not what it is today by any means, but having been part of seeing it expand in material fashion that did over that 8 years. That is really what opened up our eyes into the private lending market. We got exposure to not only the broker market, the broker network, but we got exposure to the various geographies, including Ontario, expansion out to Atlantic, as we were very much involved with a lot of the research, a lot of strategy and analytics involved with the growing the market out that way. So it was, that was very instrumental in us making that change at that time.
Cool.
When you first made the step, Sanjay, was it like, were you going straight into MIC, or did you guys do a private fund to start? What was Did you see an opportunity there? I think like Ryan and I obviously saw that here in Atlantic, where there was, I think, space in the marketplace for an additional private lender. Was it the same thing in Ontario, or what was going on that kind of motivated you to make that move?
I think it was a more of a sort of a longer term vision, as there's a lot of planning that's involved. You don't just sort of wake up out of bed and start a MIC. You do have to get a lot of your you have to get a lot of your bases in order and stuff. So you have to get your different licenses in order. And so we essentially started a brokerage, mortgage brokerage, for a couple of years while we got the
Okay.
beneath us. So that took a couple of years for getting the appropriate brokerage licenses, getting our feet wet in the brokering side of the business. So we also did some of our own personal private lending as well. So we really did get somewhat of a foundation beneath us. It wasn't necessarily the same organized type lending that a MIC does per se, but it definitely did open up our exposure into the private world a lot more.
Okay. When you guys launched, did you have like when you were doing that private lending, was it your guys' own pool of funds? Did you have investors, or were you pairing investors with people? And I'm just curious because I know a lot of people, well, including myself, when you're getting started, I think capital is always the big question mark of where it comes from, and how do you get that first little bit going?
Yeah, you're absolutely right. And it was primarily our own capital that we had saved up over the years, and some family and friends kind of thing that we had done it for. But you're right, and that's also part of the reason why it takes a couple of years. You need to start a MIC, you need to have a good amount of capital to get going on there, right? You need to have a minimum number of investors on stuff. So
Yeah.
we had to get all that on board. So that took a little while. So that 2 year time frame, 2 to 3 year time frame between the brokerage to launch the MIC is really what gave us that ability to launch in the right fashion.
Makes sense.
Yeah, a lot of kind of similarities, kind of resonating with what we've gone through the last couple of years, and I got to mention as well. I'm glad you went through it first, Sanjay, because you've been extremely helpful for us with a lot of questions that we've had along the way, and different boxes that we wouldn't have even considered checking and getting a mix set up. So thank you very much for that. Yeah, so I want to talk a bit more about Indigo's history as well. So you guys are coming up on 9 years in business now, and we'll definitely dig in more on the mix side of things. But you guys also have another arm of your business as well, that you are an exempt market dealer, or some people refer to it as an EMD. Can you kind of explain what an EMD does and why you chose to go ahead and get this license? Because we know we've interviewed a lot of mix and others, other funds that don't pursue it and prefer to go third party. And there's a lot of other ones who decide to get this license internally. So just kind of curious on your thinking on that.
Yeah, absolutely. It was honestly, it wasn't even a second thought for us at the time. It was we had already sort of done a lot of the forecasting and budgeting on our end, and going to a third party EMD at the time. But let me take a step back. An exempt market dealer is essentially an entity that stands in between an investor and these exempt market issuers in the marketplace. They essentially are charged with ensuring that they do the proper KYP, or knowing the product underneath, and then matching that with the investor and vice versa. So it is a proper suitability check that the investors are going into things that make sense for the profile. So it's a heavily regulated business. The OSC is very tight. And having been through several audits over the years, I can tell you that they do a good job in protecting Canadians and interests. And we love the fact that they are there and that they're on top of this, because otherwise the exempt market wouldn't be what it is. And it's an amazing opportunity for investors to get into these type of offerings and issuers that they otherwise wouldn't know. Most investors just know about the banks, stocks, mutual funds, GICs, and here we are allowing these investors now to partake into these other opportunities that are just phenomenal.
Mm-hmm.
So for us, the reason why we had launched it at the time, again, when looking at the costs, looking at the numbers, it was very prohibitive for us to go to a third party EMD to not only to raise capital and to do the work for us. So if we were to do that, we'd be taking on files that really wouldn't meet the risk profile that we were looking at engaging in. So, and if we're looking to maximize the return for our investors, we had to control those costs. So, it took some time to build out the strategy, the plan, the business plan, put it forth to the regulators, and we got our license. And it was a difficult approach. I can tell you that the OSC is not readily handing these out, but it was one worthwhile adventure as we've learned a lot along the way running an EMD alongside with being an issuer. So initially that was the purpose, really from a cost containment. But then over the years, we've actually been able to utilize it in other fashions in helping other issuers, whether it be to do suitability check on their existing book, as the marketplace isn't quite clear in the requirements for issuers as it relates to ingesting investors. So a lot of issuers will wake up one day, find out that they're offside. So we come in, step in, and help clean up the book a little bit to make sure that they're back on side. And we've been able to provide our guidance and support along that way. So yeah, we've done that for a few issuers, and I'm looking forward to continue to keep doing that for others.
Having done it, like it sounds like an intensive process, and even just managing the paperwork that you guys help us keep on side can be a lot. Having done it, did it pan out the way you expected it to in the cost savings and then in the growth of your business as well?
Yeah, absolutely. It did. It definitely helped us maximize our return for our investors. We have a great contingent of a team here that wear multiple hats. Like any small business, you can't just sort of wear one. So we've got a lot of individuals that are fully dedicated to our thought, our vision. That one day they'll be heavily focused on compliance. The next day they'll be sort of assisting on the underwriting side too, kind of thing. So it's been fruitful for us, and we're glad we did it when we look back.
And interesting, you made suggestion that there might be some people that are running offside. And I think we saw, or one thing I saw in my past was a lot of CMHC approved lenders were flying by the seat of their pants during COVID. And then when they started to catch up on files and doing the audits, some people, their licenses were, I guess, put on pause, we'll say. Do you expect a similar thing in the issuers? You kind of alluded to that. Do you think that's going to happen if the OSC and the CSC start really cracking down and looking through everyone's compliance files?
I think so. Yeah, I think so. I think it's really the last 7-8 years is when they've started really cracking down on a lot of these issuers. Unfortunately, it's not their fault per se. It's the guidance in the market that's not quite there. There's a lot of misunderstandings by some of the law firms that are in the marketplace, whether it be setting up of a MIC or the requirements of ingesting investors, or how many are allowed to come in, or who requires due diligence, who doesn't. So then that is a lot of issuers rely on that advice, and yeah, they wake up a couple years later finding out they're offside. So
Yeah.
Do you see an opportunity for your business to like step in? Like if someone gets frozen up, they're going to be panicking because obviously they want to get their business back online as quickly as possible to get compliant. Do you think that's going to be an opportunity for you guys to step in and be like, look, we are experts at this. We can show that all of our companies have remained compliant, and kind of offer that service? Like, look, we're going to come in and help you guys get all your files on side.
it is an opportunity, and like I said, we did do that for some time. We had done that for a few other issuers, and we've had a few others approach us as they've received some notices as well from the regulators. So there definitely is more opportunity. Is it one that we're purely focused on? I'd say no. Our focus still remains the MIC and growing our fund, and that is ours for sure. But I think once we have more manpower, we could probably grow that out more, the exempt market side.
You guys are like disaster relief.
EMD insurance.
EMD insurance. That's how Warren Buffett made all of his money. This sounds like a great opportunity to me.
It just sort of it sort of shirks us, and it makes us uncomfortable when we find these honest issuers that had the wrong guidance. And when we are able to step in and help them out, it gives us some sort of comfort that we can make a difference and change, because it's not really their fault. And yeah.
Just on that note, Sanjay, so I'm just curious on the compliance side and regulation side. Obviously, this has been buzzing in the industry for years now, and there's headlines this week that CRA is now considering income verification, although I feel like they've been pressured to do so for years and are finally now reacting. But specific to private lending, what do you feel the future is going to look like? Do you think we're going to see more regulation come here? It's kind of sounds like that's kind of going to be creeping in. But in terms of like income verification documents, anything on that side, what do you see as the future coming on the private side?
I don't see how regulations don't come in. I think once the regulators get a better grasp of what the market is and who the players are in the marketplace, they will. I think we've already seen, again, the income that you just spoke right now, but then there's also the AML that came down last year, right? So there definitely will be more checks and balances, and honestly, we welcome that. I think that's because we've adopted a lot of our learnings from Equitables and our previous lives in the banks to what we do today. So we don't have any issues with that. We actually do welcome it because it also will separate the pack too.
Yep.
There's a lot of individuals in this marketplace that they just woke up and they had, a pool of investors, but they're not sure how to run a business per se. And I don't know if they're doing right by their actual investors in that regard. So
absolutely. The last thing, I've said this before, like the last thing we want as an industry is, that headline risk of, a private lender blowing up or scamming investors or whatever. And I think the ones who are, I guess I'll call it institutionalized, or who do it properly, that build the mixed structure or MFT structure, like, they're well prepared for this already. They're already doing that type of due diligence that could be brought in the future. It's the ones who are, maybe playing on the sidelines a little bit more, or, have, conflict of interest with their brokerage and investors or whatever it may be, that could cause issues or create a bad name for the industry. That's the big risk.
Yeah, you're absolutely right. Absolutely. Yeah, headline risk is definitely not what the industry needs. That's for sure.
No, absolutely not. Let's pivot to the lending side, Sanjay. So I think you kind of touched on it already, but you guys do you exclusively operate within the MIC now for your loans. Is that correct?
Yeah.
At Indigo? Yeah. Okay, cool. And just in terms of your location, so we'll get into Atlantic Canada as well, but I'm kind of curious on the Ontario market. I feel like Neal and I have been talking about a lot on the podcast recently, just because there's so much going on and so much volatility there.
Is it the end of the world?
and the center of the universe, of course. So, yeah. But let's talk like specifics. So, are you GTA only? Are you single family focused? Do you participate in the condo side of things? And is there specific areas that you won't lend in? Like, will you lend in a Waterloo, a Sudbury, a Barrie, Ottawa? Like kind of take us through how Indigo looks at things.
I think that's one area that sort of makes us different. So I'm glad you touched on that, because we've always been open to more than just a GTA, Joe, I put it that way. And I think a lot of that comes from our background, from where we had worked previously, and having the understanding that we have about the various marketplaces within Ontario as well as Atlantic Canada. A lot of lenders in this market may not have had that benefit, so they stick to their own backyard, and there's nothing wrong with that. There's something to be said about doing what you know was best, and that's fine. But for us, we've had exposure to the Londons of the world, to Sarnias, to Sudbury, to Ottawa, and all the places in between. So we've been pretty open to lending in those, and we do have a good sort of spread on our portfolio to that regard. So, and that's not just Ontario; that's also in Atlantic as well. So we've been pretty open to those areas. It's more than just the property itself for us as well, right? We do look at the underlying borrower. We do look to see what the characteristics are and what the exit is. And as long as we're in good neighborhood settings, then we're pretty comfortable in most areas. What we will not touch really is agricultural. And again, that's more, on the guidance of what we provide to our investors through our offering memorandum. So agriculture we won't touch. We don't really get to spec type properties. Condos is an interesting one for sure. Yeah, you bring up, and I think for everything that we've done in any small business, you always try to be different, and you always try to seek where the opportunities are, and where most lenders sort of flock one way, we're trying to find out what is the opportunity in that space. And I think our viewpoint of the condos is that, yeah, there's definitely still some risk involved there, but there are still good opportunities. And so we are open to absolutely lending on condos in in the right fashion, right? So there's there's a good segment there. So and that's sort of been our approach to a lot of the lending that we do.
So two questions come from that, Sanjay. First of all, when you say spec type properties, do you mean like spec homes for sale, or what? What is that?
I mean, we don't really get into like the fixer uppers kind of thing where they're
Okay.
where they're looking to tear it down to then
Yeah.
rebuild and hoping that they can turn a profit kind of thing. So we don't readily engage in that type of lending.
That's a big part of the market in Ontario, or at least Toronto, I think. Or am I wrong in saying that?
A little less now. I think there was a period there when there was definitely there's buyers.
Margins are gone now, eh?
Yeah, yeah. At this point, a lot of properties are still sitting on the market, so it's
Like the infill style.
yeah, that's right.
Okay. And then I gotta tell me why you're confident in the condos. I need to hear it.
Why I'm confident in the condos?
Yeah,
I
why
don't
you still feel comfortable
100%. That's not what I'm saying.
Okay.
What I'm saying is that I think sort of the correction that's already happened. I mean,
Yeah.
we've probably likely seen the deepest kinds of decline, right? There's still, like I said, will likely still be some fallout, but probably not to the same extent that we've seen the last couple of years. So, finding the right condo, finding the right buyer, finding the right loan to value, there's opportunity there because on the other side, you have something that's a little more steady and maybe you lose 5 or 10% off the valuation, but if you're lending at the right value, then that still doesn't make sense to you.
Are you guys scaling back LTVs on those types of deals, Sanjay?
I would say that we're probably not as aggressive as we would be on our single family detached or anything by any means, but I'd say that we're competitive, if not maybe a little more aggressive than some other players in the market. But again, we're not going to be as aggressive on that shoebox type condo as opposed to maybe a 2-bedroom condo where there's going to be a lot more demand. There's limited availability of that type of dwelling.
Yeah. What would you look for from a square footage perspective on something like that would separate the shoebox from the non-shoebox? Is it over 550, over 700? Like what's kind of the standard guideline?
Yeah, around 550, right? 500 to 550 is probably
The minimum size.
And yeah,
And the city's filled with a lot of those that are 300 to 450 right now. So and those are tougher.
There's 300 square feet?
There is. And it's it's
Crazy.
very
Damn.
interesting. It's pretty crazy how they lay it out. Some people really know how to maximize their space. It's
2-bedroom plus den and 300 square feet.
no, that's hardly even a bachelor pad.
Holy smokes.
It's
No, cool. I would imagine that there's great opportunity. I assume a lot of lenders are pulling back, if not pulling out of that space completely right now, given the negative headlines. But like you said, there's always opportunities in the risks that others perceive, right? So as long as you're doing it with the right fundamentals, there's certainly, I'm assuming, opportunities there for you guys.
absolutely.
Yeah. Excellent. Okay, thanks for that. Let's talk a little bit more about Atlantic Canada. So I think you're our first official competitor that we've had on the podcast. So.
Yeah, what are you doing out here?
No, there's lots of space out here, as Neal kind of mentioned off the top as well, and we saw the opportunity there. Not that we want many more competitors to come, but we're happy to be we're friendly out here in Atlantic Canada. At least that's a perception.
For now.
So talk to us a little bit about, your reasoning to hop over to Atlantic Canada, kind of what your lending strategy is out here and where geographically you're looking to prioritize.
Sure. So Atlantic right off the bat can tell you it's been just an incredible market that has performed well for us. And we have actually been lending in Atlantic since our inception. So it's been 8 to 9 years now. So it's not just a couple year venture that we embarked on. And the reason why we had is because we already had exposure through our previous histories at Equitable Bank, for example. So we were integral with the expansion and growth in that market for Equitable. So we knew the market well. We had a good connections with a lot of brokers in the marketplace there. So and I think it's pretty obvious Atlantic has been quite steady. So what not to love? Market steady. You got underlying borrowers that really, when it comes down to it, they have a lot of pride in what they have. It's they'll fight tooth and nail to make sure that they keep that roof over their head. Challenges will happen. The challenges do happen to individuals, but they're honorable. they come through on what they're what they commit to, and they make good on their deals. So we've been really pleasantly surprised with Atlantic, and we'd love to do more. In fact, we're actually hiring a BDM starting with us in a couple of weeks' time, and so we're looking to continue to grow or expand our footprint in the marketplace, and that's throughout the Atlantic provinces.
Nice. I like how you open that with that you've been lending here for 8 or 9 years. So we're actually stepping on your toes.
Yeah,
That's
it's
true.
funny. Like when we came in, there was very few. There's limited lenders. Like competition was not quite what it is today. I think a
Yep.
lot of people have started to see it. After post-COVID kind of thing, pandemic, when opportunities were, and so it's starting to grow that marketplace. Which I think competition's great. Obviously, I mean, as
For
much
sure.
as you'd love to have the marketplace, but it brings about innovation, brings about new products, brings about better. When we came in, it was pretty prohibitive pricing that was being placed on borrowers. I think we upset the market a little bit, and that we were more, pricing for risk that we saw perceived, and which not meant to undercut anybody, but that's how we perceived it. And I guess I think pricing has come down significantly for borrowers now in the last 7, 8 years. So
When you looked at coming out here, did you or have you at all looked at out Western Canada?
Western we have looked at. I think that is still on our radar to go there. We did do a little bit of lending in Alberta, but our comfort's always been more Ontario and the East Coast at this point.
Okay.
I think as our fund size grows, we would definitely be looking to venture out that way. I mean, we are already sort of lined up from the exempt market dealer side to deal
Mm.
to raise capital stuff in Western Canada. So kind of like our businesses to move lock and sync together.
Hmm.
So yeah, again, as the fund grows, we definitely will be. There's great markets in the West, of course.
Still chasing lenders for updates? Manually entering deal details? Are you a law firm still not able to perform a discharge with just a simple button click? Well, Lawyer Automator is the modern solution built specifically for real estate law firms working with private lenders. Eliminate manual effort and automate intelligent document generation and digital instructions between lenders and lawyers with just a simple click. Enjoy seamless communication across your entire team and all stakeholders involved in the deal, from clerks to partners and everyone in between. Get comprehensive end-to-end reporting with visual business intelligence tools right on your screen. Perform discharges at the touch of a button. And because we're connected to Canada's largest private lending network, we'll even help you grow your client base with exclusive networking opportunities. Lawyer Automator. Work smart. Close fast. Grow your business.
Yeah, it seems like Alberta might be right, but the tough part is I guess their market is so extremely tied to resources. Um, I'm already just seeing how quickly their cycles go. Like when it's booming, it's literally exploding, and then if oil and gas cuts off, it doesn't matter what else is going on in the country. It's slowing down.
That's right. Yeah, absolutely.
Just to wrap up the thought on Atlantic here, Sanjay. So, will you guys lend all over Atlantic Canada? Is it Halifax specific? Do you have certain geographic areas you focus on?
Nova Scotia, New Brunswick, Newfoundland, we're all licensed and lending in. PEI, not yet. We are still looking to. I want to, and I think we will. It's just lining up the proper paperwork on our end and regulations, make sure we're satisfying the proper regulatory requirements. So that will come. As far as HRM, of course, everybody wants to be an HRM, but we are open again, like the same sort of philosophy as we do in Ontario. We are open to good areas, good markets. We're not just stuck in sort of the main centers. So, and we trust a lot of our broker partners. We trust our appraisers. We trust our process internally. That we're not doing anything unduly risk for our investors.
Great. Okay. In terms of marketing strategy for Indigo, so are you guys exclusively tied to brokers in all your lending areas, or do you do any direct to borrower transactions?
No, it's all broker driven. When you operate a fund, honestly, it's one of those things that you guys also know that you need the value of the mortgage broker that is going to provide you with that consistent deal flow. Managing money coming, investments that are coming from investors to discharges, you need that steady flow of deals, and none better than a mortgage broker to vet those those borrowers and make sure that they're getting the right product, the right solution for them. So it is all 100% mortgage broker driven, and we're proud to be partnering with them.
When we started, I thought you could do direct to client deals and just chatting with a couple people and they're just forwarding me 30 emails of like appraisals and this document and that document. And I was like, oh my God, there is no way you could scale this business without brokers, like at least trying to compound that a little bit. And I know even listening to Zach, like they still send it all in a million different pieces, but just having a few conversations with them, I was like, holy smokes, this is...
Yeah, like I said, when we started in 2014, we did have that broker side, and we had our first sort of exposure at that point and dealing with customers, clients directly, and it's intense.
Yeah. And I mean, beyond that too, like we talk about it all the time, but like we're in the short-term lending game, right? So you want that broker to stay engaged. It's, 6 months and 12 months evaporate very quickly, right? And you want them to be there driving the boat on that exit strategy.
Yeah, absolutely.
Very true.
It's a lot of work they put in, and it's kudos to brokers for the patience. And
yeah, absolutely. I just got one more on Indigo specifically, and then we want to talk a little bit about the market and start to wrap up after that. But can you talk a little bit about your team? I know you guys have a couple different business models there, but are you planning to continue to grow your book and maybe talk a bit about your current staff and what do you see for the future for Indigo?
Yeah, I think, listen, it's like any business. If you're not looking to grow your book, I'm not sure why you're in business. So for us, we definitely, that's a big part of our forecast, our vision for this year and the years going forward is to definitely grow the size of our underlying portfolio. Staff contingent, we have about 10 to 11 individuals, and we're still looking to bring in more on as we continue to scale up. Everybody, as I mentioned before, does do multiple operations, serve multiple hats kind of thing, but we've got everybody from, operations management team to accounting to compliance, underwriting, sales, marketing, and we also have an in-house legal as well. So we do a lot of, try to do all that in an effort of bring about efficiencies for borrowers, investors.
You're truly vertically integrated at Indigo.
Yeah, that's the idea.
Yeah, interesting. Okay,
it's proven good for us because we've been able to turn around transactions quickly. We've been able to ingest investors quickly.
You've built a really solid footing for growth.
Yeah.
You've built a really solid footing for growth by having that fully integrated system.
Yeah, I think so. I mean, listen, we couldn't do it without our team. The team's been incredible. So everybody stepped up and really contributed.
Just curious on your in-house legal. So they obviously would manage your side of the transaction. Can they also manage the borrower side of the transaction? No, the borrower needs ILA. Yeah,
you got it.
Okay. Yeah, makes sense. Cool. Neal, you want to why don't you throw some economy questions out?
Okay. What's going on here, Sanjay? We were up there. It didn't sound super pleasant. I was getting a haircut and the guy was freaking out. My barber, out of nowhere, completely unprovoked. He had no idea I was in real estate. And he's cutting my hair and he's like, so what about that housing market? And so I'm just curious from your perspective, what's going on, where you see things going, and kind of what the driver is behind it. Is it an immigration problem? Is it an over-construction problem? Is there a problem? I don't know. Maybe I'm just blowing smoke. But what is your perspective on the marketplace in Ontario specific? I ramble about Atlantic all the time, but I'd be very curious to hear what your feeling is on Ontario.
Oh man, that's a loaded question, Neal. It's
maybe I know the answer.
It's hard to know where to start with that stuff because the last 4 years have been interesting, to say the least.
Yeah.
When we first launched the MIC in 2017. Looking back, those were glory years. The first you couldn't go
every
wrong.
deal hit.
The exit, whether the borrower planned an exit or not, you had an exit because that, right?
Yeah.
The last 4 years, it's almost like everything was thrown in at once, whether it be, the post-pandemic inflation, the rates through the roof, cost of borrowing, to geopolitical issues, and now all of a sudden our friends to the south with the uncertainty there. So it just seems like it all come at once. And I think that it's hard to imagine another period in time in the near future or even distant future that we're going to see this type of all these factors, all these extraordinary elements coming together at once. So I, I, I hope and I think that we're getting to a point where it's a lot more steady. It's not going to be steady as one would like to see back in the 2000s or 2010 to 2020, but it's going to be steady where you have more of a balanced market. So, I, I think I'm hoping and I'm thinking that the worst is behind us, that we're heading into better waters now in the next little while.
Do you think the market shift is, like you said, basically from a combination of those factors, or is there one thing that's outweighing everything you kind of alluded to?
I think it's a combination of all that, right? A lot of that also weighs in a lot of the decisions that are made by our government, and I don't think it's any one element that's causing the issues. It definitely is a lot of the factors beyond our control that are having an impact on the decisions that's being made in the marketplace here. So let's just hope that those things settle down now as opposed to 3 years from now.
100%. And that's boiling over for us a little bit as well. Do you see, like, they still talk about a housing shortage, which I kind of chuckle at least locally, because we have a lot of rental supply. But on the single family owner occupied side, we're still a little short. Is that a similar case in Toronto if I pull out the condo marketplace?
I think that supply issue has always been a problem, and I think it really is sort of geographically the challenges on where they can and can't build.
Mm-hmm.
So, driving around, you do see a lot of properties available for sale, and you do see that, but prices still haven't got to a point where it's become affordable for the mass. But yeah, you strip out the condos, for sure. I think there still is going to be a supply. There is still a supply challenge.
Interesting. Last question on that marketplace. So going to condos, do you still see projects coming out of the ground? Like here, I'll say locally, we don't do condos. We do all rental supply housing. I would say that we have a bit of an oversupply right now, but the marketplace continues to drive like new footings. There's a new crane still going up every week.
Yeah.
And there's a lot of faith that the marketplace will kind of rebound and fill the existing units that we have and then continue to drive these projects. Is that what's going on in Ontario, or are projects being frozen up? What's going on there?
Yeah, they're frozen up, really, right? I mean, the
Okay.
cranes are not moving. So,
Oh, wow.
yeah, if you drive around, you either see fewer cranes out in the market, or you see that something hasn't moved in the last 3 weeks, last 2 months, kind of thing. It's just standstill kind of thing. So
They're pausing projects like midway through or like after having started.
yeah, that's what it looks like. That's what it seems like when you take just a simple drive from one end of the city to the other end of the city. It's
Interesting.
Neal, just on your note there, the article from CMHC this morning said starts are down 6% year to date in Atlantic Canada now, or sorry, in Nova Scotia.
I saw that.
Yeah.
That's
So
I mean,
things are reaching ahead, it seems.
yeah. To your point, I think some of the bigger guys are pausing. Something we had in a ridiculous year. Like for us, Sanjay, we were probably 5x what we'd ever been in the last 2 years in starts. So we're kind of peeling back probably a little bit, but it's still huge for us. So, but again, it's all rental housing, which is I think a little bit different, where it's one owner operator that owns the whole place, and so we have these large firms and groups that can kind of keep pushing forward. Versus obviously in a condo building, you might have 300, 400, 500, if not more, owners involved in the process. So if people are starting to get a little finicky or they can't sell the contracts, then I guess it would make sense to put the whole thing on pause until they can.
Yeah.
Interesting.
All right, last one, Sanjay, before we hit you with a bonus question. So we ask all of our guests this one, but what do you love most about working in our great industry?
Compliance.
I think that one gives me nightmares, but no. Listen, I can't imagine being any other industry, but now, God, I'm going to age myself here, but yeah, it's been a few years in the business, and I think when I take a look back, what think drives and more of a passion for most of this is just, especially on the private side, you're able to deliver a solution and you've got a full contingent of, you almost got an army of people working towards helping somebody, from the lawyer to the broker to the appraiser to the mortgage broker to the lender, all helping this deserving individual get into a home, whether they're buying or getting out of some sort of challenge, and that otherwise is being turned away by the bank because of some sort of circumstance. And when you can deliver that, what more could you ask for, right? You're making a huge impact on someone's life. So yeah,
it's actually crazy when you say that, because I'm thinking about, there is 1 million people involved in the process of getting someone from like not being an asset holder to owning the asset.
yeah, it is.
Like-
And it's a big part of their life, right? It's a huge part of their life. So if you can be part of that, that's incredible, right? It's
Yeah.
yeah.
Very
That's
cool.
awesome. All right, Sanjay. So, are you a pizza fan?
Love pizza.
Love pizza. Okay, there we go. So I know you guys are based. You're based in the Etobicoke area of Toronto. So we've had others from Toronto on before, and we've heard places like Maker Pizza, Buddy Ollie, north of Brooklyn. Give us what your favorite pizza spot is, whether it's Etobicoke, downtown, Mississauga, wherever. And it doesn't necessarily have to be like a fast food spot. It could be a restaurant, but we're always looking for good pizza recos.
Oh man, you know what? That's the amazing part of the city. The food is unbelievable from
Mhm.
any kind of cuisine you can think of worldwide, and it's so well known for it. So pizza, you can't go wrong here, man. It's pizza. There's one in Roncesvalles, near Hyde Park. It's called
Yeah.
Defina Pizza.
Okay, that's a new one.
Yeah, it's phenomenal. It's
How do you spell it? Is it DE?
Defina, and I think they have two
INA.
countries actually. So
One on Dupont Street, one on Roncesvalles. Is
You
that
got
the
it.
right one? Okay, love it.
Right.
Neal and I are back in September for the Canadian Mortgage Summit. So if there's anybody listening who's there, please stop by. We're actually going to be there as the podcast for that. But Neal, we got to put that one on our to-do list for a pizza stop.
Yeah, I was gonna say, when we come into town, we gotta start actually getting some of these pizzas. Sanjay, also, what would you recommend for best Indian food in Toronto?
Let's go.
oh man, just come to my place.
Sanjay's. All right.
Yeah, no, there's a place on Bloor Street that's pretty good. It's called Bukhara. That's
Bukhara on Bloor.
So
Right.
when I lived in Toronto, Sanjay, and I completely echo your sentiment. Like that's what I miss most about the city is the incredible food. But Banjara was the place I went, which is also on Bloor Street, I believe. Yeah, and my wife had been going there for years. She grew up in Toronto, but I haven't been there since I moved, so I got to have that on the to-do list too.
yeah, absolutely. Can't go
Unreal.
food, for sure.
Absolutely, that's awesome. Anything else you want to add before we wrap, Sanjay?
No, I just wanted to commend you guys. This is phenomenal. I really appreciate the opportunity here, and wish you guys both incredible success. And I think you guys are off to a great start. And yeah, would love to just continue to collaborate. And like I said, as much as we compete on one side of the fence, I think we work well together and share visions and ideas, and hopefully it delivers solutions to brokers that they need for their clients. So
100%. Awesome. Thanks so much for joining us, and thanks everybody for listening today.
Thanks, Sanjay.
thank you very much, guys.
Thanks for listening, guys. It's Neal, your co-host and co-founder at Keystone Mortgage Investment Corp. and Director of Investor Relations. I'm also a real estate agent, real estate investor, and business owner.
And your co-host and co-founder of Keystone Mortgage Investment Corporation, Ryan MacNeil. Keystone MIC is licensed under the Mortgage Regulations Act of Nova Scotia, license number 3000844, and through FCMB, license 89280. Keep in mind, the views of this podcast are for informational purposes only and are not financial advice.